A good weekend, Monday the 16th of January. I'm sure you've all clocked the major news story from the weekend, which we're going to look at in more detail. But looking at the charts this morning, starting off with a risk-averse tone emanating from those reports about Theresa May's eagerly awaited speech tomorrow, where she's going to outline the kind of commitment to leave the single market. That's what prompted the big move in sterling. But looking elsewhere, gap lower in the European stock futures, the DAX centre left, you can see gapping down and moving lower through the cash open. The SPOOs following suit, but fairly gradual move. Not forgetting it is the Martin Luther King Jr. Day today in the US, which means that there is no pit trade in the US and is a shortened electronic session, which typically means that you might see a bulk of the price action occur through really the European hours. After that, things will get very quiet. So worth considering that point from what you're going to expect from this afternoon session, certainly. So fixed income higher, Bunds up 43 ticks. Italy as well, they did get downgraded by DBRS late on Friday night, so we'll also have a look at that as well. So a stronger dollar this morning, up 0.4. Both major pairs lower, obviously led by the weakness in the pound. So let's start with that. Taking a look where we're sitting at the moment, 120.49. And we did in the spot briefly trade sub 120. So of course these are fresh 31-year lows for cable. Looking at the headline stories then, just to go through and clarify. Let me just switch my screen. So the reports came, I think it was late Saturday night, I think I first saw it on Sky News, and they were reporting ahead of the publications of the Sunday press about Theresa May will prepare to withdraw from tariff-free trade with the European Union in return for freedom to curb immigration and strike commercial deals with other countries. One interesting thing here on this chart on Bloomberg, you can see the net negative result it has soon as Theresa May generally speaks on this matter. You can see here Brexit when it actually occurred. Obviously that was the biggest daily percentage move that we've seen on record. Then she took power, and actually, if you remember at the time, there was a lot of toing and froing of who would actually take the leadership of the Conservative Party. That whole situation or fanfare around Boris and Michael Gove. However, we actually got May into power quicker than probably markets had expected, and that prompted actually some very strong, some of the best gains seen in the pound at the time, given the kind of reassurance of getting our house in order, so to speak. But then, obviously, in October, we had that reaction to the Conservative Party conference. That was a big down day for sterling. Then she gave a New Year interview where she was committing to the Brexit means Brexit. And now you're getting these latest reports about we'll seek a hard Brexit and leaving the single market. So certainly, whenever she speaks, this is definitely a market-moving event. And, of course, tomorrow, I'll look to get all of the timings later on today to relay to you, but she's giving one of her most in-detailed speeches, which is where all these press source comments have come from the weekend. And that's definitely going to be a market-moving event for sure. Looking at some of these other comments, government officials said they expected Theresa May's speech to cause a further market correction. That's according to the Sunday Times. The Prime Minister's office declined to comment on the report when contacted by Bloomberg. So I'd say it's quite unusual to have government officials saying this kind of commentary. Maybe I can see what they're trying to do is like central bankers, they're trying to manage the market expectation, and they're actually they're basically saying she's going to stick to a pretty hard line and you should be prepared for downside. That way, psychologically, it's not such a surprise for market participants. They don't hit it so aggressively, would be probably the thinking there. Elsewhere, though, I mean, looking at the actual chart that we've seen develop here, these are the last couple of days for sterling. A couple of areas to really identify and if you remember that period there, when we actually had this sell-off, that previous low point where we got that 120.34 was the algo kind of flash crash low that we had in cable. We got close to that last week, actually midweek, shortly after 3 o'clock here. That was when a headline snapped, and all it said was that Theresa May is going to give a speech next week outlining details on Brexit. Immediate selling occurred in the pound before quite an aggressive rally, but you can see this really strong gap lower seen in the futures from the reopening of trade to get things underway this week. We initially dipped all the way down to literally the 120 handle before then just steadying around 120.50. Now, going back to a slightly longer dated chart here I've marked up, you can see a couple things. Obviously, the key move that was seen over Brexit itself, that, as we just said, the biggest intraday move ever for that currency. Then we kind of had that support seen at 128.06, which held in place for quite a while. We had good economic data in combination with actually getting a government in place pretty quickly, saw a very nice bounce actually. Before then, that was the Tory party conference, the beginning of October was the catalyst. Then you had the algo flash crash on the 7th of October. That was during that Chinese holiday. Talking of Chinese holidays, Chinese New Year coming up shortly as well. And then the most recent move here then was the break that we've just had occur, which you can see there. So technically, he's challenging some very interesting levels around here. If we really start to break 120, then you could say it could open up some further downside. I've marked up here as well a couple of the calls that we've been hearing last week. These aren't immediate targets. These are kind of in the premise that once Article 50 is triggered and negotiations get underway and it starts to point towards an ever harder Brexit scenario, Goldman Sachs, HSBC are looking at a 110 overall target there. And Deutsche this morning, I was reading one of their notes, they're looking down at 106. So the question mark at this point, I guess, trading these types of events is, at what point is it priced in to sterling from the information that we have to hand at the moment? And I would say where we are at the moment seems fairly reasonable. I think tomorrow, once we get some more clarity from Theresa May, given that this is supposed to be her most detailed speech yet, then maybe we have a little bit more information on whether or not to take this move lower at this point in time. So it's really the clarity that we're awaiting for that. A couple things though why we've bounced here. A few things. Reports in Bloomberg that UK Treasury is drawing up plans to reassure investors following May's speech on Tuesday. So essentially what this is the UK government is said to be putting in plans to speak to major banks in order to calm nerves in the market of another big sell-off. So that's certainly one thing that's probably helping. And then also as well, you've had Trump just talking up the premise about wanting to speak over trade deals, prepared to offer the UK a quick and fair trade deal. So obviously this then leads into one of the bigger things, and just a quick look at a few thoughts that Deutsche were talking about this morning. And they're looking at one of the most important areas of the PM, and what has been said so far is the willingness to forego membership of the customs union. So a full exit from the customs union would be highly economically disruptive and would compromise investment into major UK export sectors such as autos. Leaving the customs union would leave the UK a free hand to negotiate third country trade deals, such as with China or the US. So that's when that Trump comment comes into play, and may have reassured some investors this morning from really hitting that and the continuation of that downward move seen overnight. Now, one of the main points though that Deutsche go on to say, and I completely agree here, is that third country deals could replace UK's existing trade arrangements soon, but trade deals are highly complex, and trying to negotiate those on such a wide level in combination with all the other parts to get into order in such a tight time frame, without this go ahead on a transitional period at this point, I think is extremely hard task, and I can't see that being anything other than negative at this point, unless, as I say, possibly after Article 50 is triggered, then if we can work out some kind of extended period, if you like, to take this 2 years to 5 years possibly, then it might be more manageable. But these are obviously things, as I say, we're looking for in that speech tomorrow. A few of the other headlines looking at on this matter, obviously Bloomberg, as I say, UK said to seek calm investors after May's Brexit speech. So this is going, again, this is all sources, but this is probably, I would say, well timed to leak to the likes of Bloomberg to feed into the market in order to negate the aggressiveness of the sell-off from those reports at the weekend. That again, the fact that the UK government is planning to reassure investors by talking to the banks behind closed doors in order to get them in the right, frame of mind. Elsewhere, you've had comments as well from the Chancellor, Philip Hammond. I'm not sure if you caught those at the weekend, floating the idea of radically changing the UK's economic model. A hint he could cut corporate taxes and employment rules. Vowed to do, this is ever so Draghi-esque, said whatever we have to do, so that whatever it takes mantra is getting rolled out now by the Chancellor. Now, I get this. I get what he's saying and what the plan here to make kind of Britain the new competitive centre, cut corporate taxes. Obviously, one of the main things which they're trying to counter politically at this point in time is to stop the flight of the financial services sector to Europe, which has obviously been a bit of a threat that's been hung over the UK government from a lot of the major banks and corporations. The only thing I'd say about pushing through this aggressive nature of these corporate tax cuts would be politically for the Conservative Party. Now, if you start dropping it aggressively and you're so, let's say, pro-business in that way, that's only, I think, going to be countered by the opposing political views about giving further assistance to that kind of sector, if you like, which obviously has been politically on the back foot or negatively viewed ever since the financial crisis. So managing that from a political point of view, I think, would be very difficult. And so as much as this is logical, I do think it's a little bit pie in the sky at this point. We'd have to see how the land lies after triggering of Article 50, which at this point is the end of March. Now, let's not forget about the triggering of Article 50. That timeline might still change. Theresa May's speech tomorrow, you never know. That would be something definitely to look out for. To round off this as well, Bank of England Governor Mark Carney is speaking tonight. And I checked on the Bank of England website, there is prepared text. 6:30, I think it is, this evening, speaking at LSE. However, there is no details as to really the content of what he's talking about, but I am sure that if there's any Q&A, or certainly if there's any press in attendance for those kind of doorstep comments that we always refer to, certainly he'll be asked about the situation, so I'll be interested to hear his take as well. So that's the kind of pound situation. I don't really see it pushing lower again to a huge degree from this point, given the fact we're already down around 2 points already at the low. I'd say that 120, that initial test that was seen very early at the entrance of European trade, that would be the key level. And I would imagine that will act as pretty strong support today. Because after this hit, I think most people will probably wait for Theresa May. Keeping in mind as well that US participants is going to be very light on the ground given that Martin Luther King Day holiday. So you might have seen the worst of that selling. Elsewhere, looking at the DAX this morning, you can see that we already gap low on this kind of negative general sentiment occurring. And then also, we have had a couple of developments from a European basis. One is this one. BMW. Trump threatens BMW with border tax on cars built in Mexico. Now, I don't think this is just the sole catalyst for the move lower. But this is certainly one thing that should probably weigh on individual companies and their respective sectors. Earlier check that I saw, BMW were down around 2%, but this is what you get with a sector read across. The likes of Daimler down a similar margin. So essentially, President-elect Donald Trump has warned the US will impose a border tax of 35% on cars that German carmaker BMW plans to build a new plant in Mexico and export to the US market. This came out in German press at the weekend. Now, not sure of the exact amount of vehicles that certainly gets employed or built there, but looking, the BMW spokeswoman did say the company was very much at home in the US, employing directly and indirectly nearly 70,000 people in the country. But it's these kind of comments that certainly you need to be aware of from Trump tweets before, of course, we get his inauguration, which is at the end of this week on Friday. So be mindful of those tweets, because he has already tweeted about other car makers around that kind of sweet spot between 11:30, 11:45 our time, seemingly when he's going about his kind of morning routine is when he tends to fire out some of those tweets. And if he starts talking about European automakers and border taxes, that could also offer potentially a bit of a trade opportunity during our session, given it will be during market hours. Other things to be aware of from the weekend. So we were talking about this a lot at the end of last week, about the importance that DBRS has as the fourth major rating agency after the kind of S&P, Moody's, Fitch, and more importantly because it was the highest rated in the upper quartile, i.e. A rated, and that if it got downgraded, then essentially what that means then is that Italian banks must pay more to borrow money from the ECB when they use countries' bonds as collateral. So this hasn't had, I'd say, a major impact on the market this morning, but certainly I'd just be mindful of performance of the Italian banks, and in combination with the firmer dollar, with the dollar index up 0.4, the euro is already looking a little softer this morning. A quick look at that, you can see we had a brief look at those lows that we printed. Let's go to the back end of last week on Friday. We did break that, but we've come back to around that level at the moment. So definitely some negatives out there, which is probably as well explaining some of this general negative connotation for the equity market as well. This DAX, and looking at just broader assets this morning, I think you need to just be identifying some of the ranges could be fairly tight, given the fact that the lack of participation out of the US might keep things relatively quiet overall. S&P, likewise, you've got S1 here and pivot kind of defining that, and then that low print that was seen before that rally on Friday, that 22.62 and 3/4 level. One other index though that continues to buck the trend, of course, in the context of the ever weakening pound, is the FTSE. Record highs this morning once again, on track for its 15th straight day of gains. Remember the key point here being that the FTSE 100 is a specific index dominated by multinational companies, which of course benefit from a weaker pound as it increases their relative value of foreign earnings and makes their exports more competitive. So there's one thing that has been quite a definitive correlation here, and that's been the inverse relationship where lower cable goes, the higher FTSE goes. That's probably, I wouldn't say, going to change anytime soon, and certainly has played out again this morning or earlier this morning with that move in the pound. However, as I said, I'd just be a little bit cautious about shorting pound at this point. You can already see it as I've been speaking. It's had a little attempt to make a bit of a pullback here. Quickly, just looking at the schedule for today. Obviously, today is extremely quiet. So more so it's about, as I say, technically defining the range of these assets and then playing accordingly. I wouldn't say that there's going to be much in the way of a headline catalyst today, except in the scenario that something unexpected does materialise. I've had a couple of comments from ECB member Villeroy this morning, Obviously, we were looking at the pound being a little bit weaker in the context of the broader dollar strength, the Italian sovereign situation, but Villeroy also stated that concerns about inflation return is being greatly exaggerated. So, i.e., the ECB obviously a bit concerned about the return or the speed of return of inflation in the euro area, as we've seen evident in economic data more recently. That would then kind of lead towards that potential taper. However, Villeroy saying the opposite, that that's been exaggerated. So that could also be in view, but keeping in mind Villeroy is a dove. I think more importantly, though, is putting in context the overall week. As you can see here, Monday, very much the most quiet day on the docket. Tuesday, we get not only UK PM speech on Brexit, which ultimately will probably act as one of the main market movements for the whole trading week. You also get UK inflation readings, CPI, PPI and RPI. In the US session, Empire and a couple of Fed speakers. I must say Fed speakers are fairly prevalent throughout the entire week, barring today. But as we heard last week, really not much deviation from the status quo from the Fed speakers. And on that note, not expecting much either from this event on Thursday, the ECB interest rate decision. After a very interesting meeting last time round, where obviously they trimmed that purchase amount monthly to 60 from 80 billion per month. They also made some tweaks about the lower bound maturity range from 2 to 1 year up to 30, as well as purchasing under the deposit rate limit. This is very much now a wait and see measure for the ECB for the foreseeable months, I would imagine. On Wednesday, and also Wednesday, Thursday and Friday, you do have this, which is the World Economic Forum in Davos. Now, for those who are new, generally this is a meeting that happens every year at this time of year. And what it is that all of the major movers and shakers, whether investors, hedge funds, central bankers, politicians, they will all be in attendance giving various speeches. I wouldn't say that there's massive market reaction, but I would, of course, in the context of the economic environment, keep a close eye on investors' perceptions, possibly on some of the key themes like Trump, the implementation risks, Trumpflation. OPEC oil ministers could be in attendance, any commentary there about the ongoing cuts, the Brexit situation, and also the risks surrounding the European political spectrum as well are things to be monitored. So that's going over the second half of the week. Wednesday, it picks up a little bit on the US side. Obviously, you had the core PPI inflation readings at the end of last week in the US, did get some attention and did strengthen the dollar at the time, overshadowing the retail sales report. So the US CPI number will be interesting on Wednesday. Then Thursday, more US data, housing sector, Philly Fed, and your regular jobless data. And then Friday, UK retail sales, and you actually get the US Trump inauguration. Now, the inauguration I see as largely a non-event. Spoke about this last week. This is because it's more of a formality, it's more of a fixed-natured event where he's probably going to have a very predefined script in which he'll just deliver. Touch wood, that's probably how I foresee that event going. It's not going to be like the press conference we had midweek last week, where he has the opportunity to do a Q&A and have an open kind of conference, if you like, with the press. That is the tradable event. These types of fixed, set, predefined speeches, which are quite generic really, I would say are more, to a lesser extent, going to have a market impact. Okay, so that's kind of what the situation is at present. So I'd say keep an eye on this euro, just as I've been speaking, another push lower. It looks as well, technically the dollar index has just broken above the high that we had on Friday afternoon. So possibly a bit of an extension of the already dollar strength that was prevalent given the aggressive sterling weakness. Sterling volatility, so 1 month or 1 week vol is also up at elevated levels, so that Theresa May speech tomorrow will be critical for the markets. Okay, going to leave it at that. So enjoy your trading day. Remember, US markets pits, that's the floor trade, is closed this afternoon. So just be realistic with your targets for trades that you're looking at today. Okay guys, have a good one.